Thank you for downloading another episode of Your Life Simplified. My name is George Fernandez, and I'll be your host for this episode. As we work with our clients as fiduciaries and as advocates, we help them make very important decisions. And investing, of course, is a big part of what we do with our clients. But more importantly, it's investing with a purpose. It's investing based upon what's important to our clients, helping them reach those important goals. But the way in which we invest is also important too. So today we have Andy Garrison from our Overland Park office, Senior Wealth Advisor and CFP. So Andy, welcome to the show.
Hey, thanks for having me. Glad to be here.
This particular topic we're talking about today is really about investing with an impact. And there's a lot of different ways that we can do that. Investing it with an impact from a socially responsible perspective, from a company perspective, and how they're actually integrating with society, so to speak, as well as making an impact with the dollars that we are investing with these companies. And so that's the topic we're going to talk about today. So I appreciate you being here to help us walk through this particular topic here. It's one that has fascinated me for some time. There's one particular thing that I thought was really interesting. The very first time I ever heard about this kind of topic, I didn't realize that there was like these nuances that exist with it. And so I'd kind of like to start there a little bit to make sure that everybody kind of understands when we talk about impact investing or socially responsible investing or ESG, and we use terms like that, what those things actually mean.
Yeah, I think that makes perfect sense. It's certainly one of those things that as it's growing as a concept, more and more people are latching onto it. And the neat thing about it is it's completely personalized. Right.
Yeah.
And so when we think about impact investing or investing with our values or socially responsible investing or environmental, social governance, all those different terms come together. And it's really a way to, how do we answer the question, how do we decide what's the best way to invest our funds so that ultimately they're aligned with our values? And when we think about investing our funds, whether it be for a goal like retirement or a kid's education or some charitable cause down the road, we're very focused on the purpose of those funds. And so when we're talking about impact investing and socially responsible investing, we also take it to another level and become focused with what are the types of investments we're making to get to those goals. And are those things we either agree with, are those things where we see the world going, or are those areas that we might have an impact in?
Yeah, it's a really great point. So, if you're sitting there, you have, as an investor, and you have personal feelings about a particular activity. I think one that we see often is alcohol, firearms is really common. And if you have very strong, closely held beliefs about that, the social responsible investor would say, I want to avoid investing in companies that provide that or that do that. But there's also kind of another side of that from the ESG perspective as well, isn't there? I mean, it's really more from the perspective of the company. How much are they actually integrating into this community or something along those lines? Can you help us understand that a little bit?
Yeah, absolutely. I think just a little bit of history makes sense here.
Okay,
in the sense
that'd be great.
Yeah, and so if you look at where socially responsible investing kind of evolved from how do you actually implement it and think about it, it started with what we would call negative screening today. And that's just a fancy term to saying there are certain types of companies that folks didn't want to own, whether it was like you mentioned, alcohol or tobacco or firearms or something controversial. And so the initial approach to socially responsible investing was saying, let's screen those out, right? We just don't want those in an investment portfolio. Very industry based, right? What is the core function of that company? And now fast forward many years as time's evolved in this, there are certain companies that an individual may not agree with that they want out of their portfolio. So we can look at doing that, making sure they're not investing in certain ones. But now we're also looking and saying, what are these companies doing overall? Not just their core business function, but how are they operating in respect to the environment? For example, if someone's concerned about the environment, they may want companies that have good track records, reducing their carbon footprint or not dumping chemicals in a lake, right? As simple as that, or making sure they've just got good stewardship across the board. And so now we've seen companies start to integrate and say, hey, outside of our core business function, here's what we believe about certain things. And so what you're seeing is kind of companies starting to almost share some values, some that some folks agree with, some that others don't, but they're starting to operate based on those values too. And the three big kind of umbrella areas are the environment and what's going on in the environment, social issues, whether that's workers' rights or supply chain issues, and then governance, which is basically how well do they keep their books, how diverse are their boards, and those elements.
That's really interesting. So that's where ESG comes in, right?
Absolutely. Yep.
Okay. So the environment, the social, and the governance.
Yeah.
Okay, good. So I'm learning here. So I appreciate that. Yeah, again, I've heard these words used, but I haven't quite understood how they all kind of work together. So when you look at that ESG or that the environment, the social and the governance piece, I mean, how do we know that those companies are a good fit for that investment type?
Yeah, that's a great question. And it kind of goes back to everybody's different. And that's one of the ways I love the structure that we have is that it all starts with understanding clients' values. And while George, you and I may have a very good idea of what makes a company responsible in a lot of areas, there may be other areas that you're more passionate about than I and vice versa. And so we always start with the client and say, what are we trying to accomplish with the portfolio? Not only is it perhaps fund retirement, right? Or fund a business distribution or charitable inclinations or whatever it may be, but how do we want to reflect our values in that portfolio? And so we start understanding what is most important to each client. And then we look and we try to identify companies. We obviously may not want to own companies that are completely opposite of some of those values, but then we're also looking saying, well, what companies out there maybe have a very good track record overall of moving in that direction, right? And so if someone's really concerned about having good, diverse representation on a board, for example, a corporate board, we look at those companies and say, well, what companies are moving in that direction, right? Who's actually making proactive effort in that? And then we're able to, first and foremost, make sure we feel they're good financial investments, right? But at the same time, ask, are we able to bring those other elements in that match those client values as well?
Now, when you say composition of the board, what exactly do you mean by that?
Yeah, so most companies, almost all publicly traded companies, have a board of directors on there, and so they act really as the oversight for the company. And so, the big movement now is to make sure that the board members somewhat represent the ultimate diversity of the client base or customer base of most companies. And there's a lot of logic behind that, I would argue, that you want to have people that understand your core market. And so, as people are thinking about looking at how companies are made up with their boards and the representations they have on there, they're really focused on creating that diversity and that expansion as well.
Yeah, and I think that's really interesting because, we hear stories and you kind of, if you go out and read, investment magazines and stuff like that, they always talk about the fiduciary responsibility of the board. And do you see that has caught, this kind of approach from companies? Do you see that change? I mean, obviously they're still fiduciaries, nothing's changed there, but do you see their response as a fiduciary has changed as well?
So I think it has in a little bit different of an angle. If we go back many, many years ago, a few decades ago, the number one responsibility for a company was to make money for shareholders. Right. And so what you've seen as socially responsible investing, impact investing, all these different terms have come and become more and more popular. You're seeing that recognition that perhaps there's an opportunity for these to actually increase shareholder value. And so where you're seeing the responsibility of the board look at becoming more diverse and trying to represent their client base and their customer base, you're starting to see a lot of these companies recognize that and say, hey, not only may it help our responsibility to do what's right for the company, but it may actually help our shareholders too, if we're able to better understand our total markets and what they're looking for, what they need, what's important to them, and then deliver our product and services in a way.
Okay, so it's kind of that perspective of if we're doing what's best for the community, what's best for the customer, what's best for the world, so to speak, I guess you could argue, that it has a positive impact on the outcome that they have as a company as well, I think is what you're saying.
Absolutely.
Thanks again for downloading this episode of Your Life Simplified, which is produced by Mariner Wealth Advisors. And at Mariner Wealth Advisors, we're here to serve as your advocate. We help people chart a course to reach their personal and financial goals so that they can have greater peace of mind that may lead to a more fulfilling life. We do this by always putting our clients first. Because as fiduciaries, we're required to provide guidance that's in the best interest of clients, not in the best interest of a company or shareholders or anyone else. So as you listen to this podcast and have questions about maybe your own financial situation, or would simply like a second opinion, or even you have an idea for a future podcast, please go ahead and email us at podcast@marinerwealthadvisors.com. If you found the information on this podcast valuable, please go ahead and share it with a friend or family member that you think might benefit from this information. And please don't forget to subscribe to this podcast so you don't miss an episode. Thanks for listening, and now back to the episode.
So that's really interesting. So with that in mind, does that change the risk level for these investments? Are they the same as any other investment, or how does that come about?
Yeah. So it's really interesting. And I think there's two ways to look at risk. So if you're thinking of the pure investment professional way of just, standard deviation and all these kind of crazy terms, all companies that are similar are going to operate in a similar sense from a risk perspective. But if you take it a step farther and you look at it from the business risk that a lot of these companies have, that's, I think, what you're starting to see change. And going back to the environment, for example, just for a moment here, if a company is really focused on producing goods that don't pollute, right, or they're focused on reducing their carbon footprint, there's a lot less chance of regulatory hurdles coming up for them, right? Tougher regulations, fines for issues going on. If on the social side of things, they're taking really good care of their employees, right, and they're scoring well and ranking well on the social side, their employees are often going to be more productive as well. So you're seeing, I think, the risk, the core business risk of companies, you're seeing these organizations recognize that by focusing on these different elements of social responsibility, they can expose themselves to less broader risks and perhaps have longer tenured and happier employees and all those things that might go into making a business more sustainable itself over the long term.
That's very intriguing. With that in mind, have you seen companies that were less ESG oriented, years ago, but now are more ESG oriented today? Have you seen people make the shift, or you see it? This is more new companies that are kind of starting out of the gate like this.
I think that's an excellent question. And the way I look at it is kind of from two angles. One, specifically for the investor's perspective on it, but also with companies, what you've seen is socially responsible investing, and all this has become a bigger and bigger perspective in the market. You're seeing companies recognize, hey, if people are looking into this and people are interested in it, we kind of need to start being interested in ourselves, right? If your core market is starting to push you in a certain direction, you start moving in that direction. And the other element that we see when we look at companies from an investment standpoint is we kind of look at them, and sometimes there's poster companies out there. To your point, we won't name any names, right? Yeah. But if somebody believes X, Y, and Z very strongly, there might be a company that's just perfect in all those categories and checks all the boxes, and that's wonderful. And you may want to own that if it's a good investment otherwise in a portfolio. However, on the other side, there may be companies that if you were to say, rank them on a scale of 1 to 10, maybe they're a 5 right now, right smack in the middle. And you look at it as a snapshot and say, hey, it doesn't really match everything perfectly. But the year before it was a 4, right? The year before it was a 3, and so on. And so they've put new policies in place. They're moving in different directions, and it just takes time, but they're making a lot of business decisions that are pushing them
kind of making progress toward that goal.
Yeah, absolutely. Absolutely. And those seem to be what we're hearing from clients, that a lot of those types of companies are the most intriguing to look at investing in. A, because perhaps they may not be as recognized as leaders at this point. But B, it just, for a lot of folks, I think it feels good to kind of be in there in the progression of a company getting to a better place.
Okay. When you implement this for clients, this kind of strategy or approach to investing, are there certain things that you have to do in order to find companies like this? Or is there a scoring system? I go out here, I got this particular tool, and I click this box and it tells me that their ESG score or something like that. How does that work?
Yeah, great question. So there's becoming more and more service providers out there providing all kinds of data in there. And we're very blessed as advisors at Mariner because we have a wonderful investment team and investment committee that can dig through all of that. And there's numerous groups they can subscribe to provide that. One of the things we've found, though, is we've continued to build portfolios for clients in this area, is a lot of the rating agencies that are rating companies based on their social responsibility scores do a great job, but oftentimes they'll say something different, right? And they'll have a different perspective on whether a company is responsible in certain areas. And then we've also found that it can sometimes look in the rearview mirror and it's saying, what has a company done? And so one of the things that we like to do is just keep up with the companies we're invested in by looking at everything from news feeds to press releases to what's changing as far as their upper level management and even social media posts to see what people are saying and where they're kind of trending in that way.
Okay. So the big picture or bottom line there is you're working with our specialists here internally that kind of help you find those. Do you have clients that actually bring you companies to look at as well and say, hey, I heard about this company over here. This is what they're doing. Can you take a look at it? Do you do that frequently as well?
Yeah, we definitely do. And so what we get a lot of times for clients are themes, meaning this is really important to me. Or for example, I was just chatting with a client this morning and his focus is making sure the companies he's invested in support media in a way that doesn't harm children. And he described that in a lot of really interesting, unique ways. So he's saying, how can we build a portfolio around this? I shared a couple of things we can do, but I also asked him, so tell me some companies you think do a really good job at that, right? And so that we can kind of use some of the companies they bring to us as a foundation for looking at others.
That's a really great thing because, we talk a lot about here internally with the importance of knowing who our clients are, knowing what's most important to them, how what's most important to them relates to what's happening with their money. And so that they are investing, with an impact, they're investing based upon what's those conditions. And knowing who they are, like what you just said, gives you an opportunity to discover things and that you can then apply that to other clients. What other things have we not talked about, ESG, SRI, impact investing, that you think that would be important for our listeners to know?
I think the big thing is understanding that it's here, and I don't think it's going away, right? And that doesn't mean that everybody needs to jump on the bandwagon right now, but it is something to consider. And what you're actually starting to see, I was actually chatting with one of our investment team members the other day, and he was telling me that as they look at investments without the socially responsible lens, they're actually starting to pull in some of the socially responsible lenses they use because it adds to a deeper analysis of companies. So I think there's going to continue to be more and more demand from our clients, from all of us as consumers, moving companies and investments in that direction. But I think you're also starting to see kind of a new trend of a recognition that a lot of these elements, even if it's not a core purpose of how you might invest in a company, they still serve as a really good foundation for understanding what a company does, what their businesses are, what risks they might be exposed to in other areas as well.
Yeah, that's a really interesting point, because as you go through, I think you kind of described this a little bit earlier. You have 5 companies you're looking at, and they're all very similar in the way that they work. And maybe their scores, if you will, in traditional technical analysis, they might all be very similar as well. But you might be able to call out one like this, and then you're proactively looking for opportunities like that with your clients. And that's important to our clients understand that, that we can look at this proactively just like they can, and kind of, again, be mindful of what's important to them. So with all of this said, we talked about, the way in which we determine it, kind of the history of it and everything else, and that it's here to stay, I think, as you described. Is it gaining momentum? Is it gaining popularity compared to where it was before?
I think it absolutely is. And you're seeing that, and you're seeing awareness kind of leads everything, right? And as folks get more and more aware that it's an option and it's a movement kind of going on, you're seeing more and more people jump onto the proverbial bandwagon. Now, I think it's a great bandwagon to be on, but you're seeing more and more people jump onto it. And as that happens, it's certainly increasing the popularity of it, which, by the way the markets work, the broader markets, not the investment markets, it forces companies to look at things from a different angle of how they're producing their products and services they deliver to their ultimate end users, which then, of course, because we're investing in those companies, influences how we look at companies too.
That's a really interesting point, is so our clients can understand that by investing, you can have an influence kind of directionally where you want to see some of these social changes take place that you're looking for, from the way the company runs itself, the way that they invest in the community and so forth. I think that's a really interesting approach that you've described there. Any final thoughts you want us to make sure that we walk away with?
So I think my final thought actually ties in perfectly with what you just said. I think as consumers, we're really familiar with the concept of voting with our feet, right? Or voting with our wallet.
Yes.
And now when we think about our investments, this is just the way of extending that to voting with our investment portfolio and the assets we've built up for the goals we have for ourselves in the future.
So that's a way that you can enhance change.
It certainly is.
So thanks again for being here today.
Appreciate being here. Thank you.
Thanks again. And to all of you listening today, we really appreciate you being here. And so please let us know what you think about the episodes that we bring to you and how they're affecting and simplifying your life. You can let us know by sending us a note at podcast@marinerwealthadvisors.com.
Wealth Advisors, or MWA, is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply a certain level of skill or training. MWA is in compliance with the current notice filing requirements imposed upon registered investment advisors by those states in which MWA maintains clients. MWA may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Any subsequent direct communication by MWA with a prospective client shall be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. For additional information about MWA, including fees and services, please contact MWA or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov. Please read the disclosure statement carefully before you invest or send money.